Hey everybody, DayTraderRockStar here, and this is the weekend update. Now, typically I would say this is the high probability watch list for the week of, which we're coming up to April, it'll be 28th or something. What will be next week? The 29th, Monday or 28th. So the last week of April, coming into May. And typically this would be a combination of a market review. I would send out a couple videos. I want to try something new today because I kind of have some things I wanted to discuss with everyone. We had such a busy week. There's so many new things and new people on the site, so I want to keep on updating some important factors and kind of get everything in one video, so it's not overwhelming. I have it organized in my bullet points, so we're going to get started off. And the first thing I want to do is just talk about the trading today in this week. We'll start off just kind of, and this is going to be it's called key setups of the last week. And we're going to go back a couple days and just look at key setups, which trades we took, which trades we didn't, what we missed, and why do you need to take these trades. Now, I think this is one of the most important things to do because it really instills the discipline of when you see it. And we know that and a lot of you maybe are not with me during the day when we're trading this. But mind you, when I say that these blue lines are put in here, we put these blue lines in here as the market is moving. This is how I identify our setups. So each time we could look back here, there'll probably be a reason I put the line there, and we see, and I'll explain what was the situation and if we took that trade and what came of it. All right, and I'm going to try to do that and kind of scroll back, and we'll do it kind of a fast way of doing it. And it might be a little too fast for some of the beginner traders, but remember, this will something you'll eventually get a hold of, and it'll become second nature to you if you stick with it. So today, the whole week, we had earnings, and the market was very volatile. We have the GDP report that came out. Market sold off a few hundred points. It reversed. It was probably down about 400 points at one point. Reversed hard yesterday, came back. Then we had earnings in the Microsoft and Google that rocketed the market after hours. It was really, really volatile in the last few days. And we're entering the May time frame. So even though we're focused on futures here in this part of section 1 of the video, this is very important because I'm doing Zoom calls now probably 2 to 3 times a week, and speaking to new traders, new members, new lifetime members, new VIP members, and and I'm trying to instill the importance because everyone has the same issue, over trading. And this week I said, all right, we have to lead by example. We cannot overtrade. That is the worst thing for traders, and to really point out the setups and not miss anything, because missing a great setup is just throwing away money because it works so well. So we have that, going for us, and really just play by play, market minute by minute coverage and showing you why the market's going to move here, why it's going to move here, and where we're going to take profits off and why we're taking profits and everything about the market. And hopefully the next day you get to see the same setups and you feel a little bit more comfortable getting in. So this was today's market. I want to go back. We'll start off at 9:30. Well, we actually had some economic news at 8:30. PCE report, I believe it was, popped the market. Market kind of grinded down. And at 9:30 here, we kind of had a quad rotation. And, and I like to go back and always, make sure that everyone watching the video, if you're new there's a certain setups that we want to trade. And the key to success in the markets is not over trading, right? And is having the patience to wait for the right opportunities, not to buy, when you should be selling, and not to sell when you should be buying. You got to change up your train of thought. And a lot of the indicators that I show us, and the combination of this is going to help us determine that. And when it helps you determine it, you have to take it. You cannot not take it. That's why we're here. This is serious. This is very serious. This is an expert's game. If you're going to be good at trading, it's like being good in baseball, professional baseball, good at being a professional gambler. It takes an extreme personality to be great in whatever, and to be great. Most traders fail. And it's hard. It is very hard. And so it's hard being a professional player of anything. It takes that extra determination, the extra concentration, extra discipline, and a little skill. But really, it's determination and determination and follow through and discipline and continuing to work hard at it and knowing what you're doing is the right way and it's the right path and not gambling. That's the killer. The gambling, taking shots. It might work out sometimes, it might not work out. But we all have to find our own path when it comes to that. I could stress the importance of, making sure you're disciplined. I could stress that all day long, but eventually you're going to have to determine that and figure that out yourself. Because you will, and I know that because I've been through 25 years of trading, and I know how it was when I was a beginner, and I knew everything, and it comes full circle. And sometimes the simplest things are the easiest things, but the market wants you to believe everything is complex, but it's not. It really isn't. There's basic observations in the market. There's basic momentum. You want to be on the right side of the market. We want to be identifying the areas that are going to move. We don't want to just be randomly in the market and not knowing which way the direction is. So we get, the specialty that we do here at Day Trading Radio is identifying about three, I would say three on general, 2 to 3, sometimes 4 different type of setups in the market that give us a big move, a bigger move, and usually it's a pivot, what we call a pivot. It's a change of direction. It's usually the beginning of a bigger move. Now the flag is a continuation pattern, so that's a little bit different, but that's also a very powerful thing, and we've managed a way to I've managed a way to identify this and know when it's going to work the best, basically. I know when it doesn't fail. I know that situation when it doesn't fail. So when we see that, it's just like something else. It's the rotation back, the upward stochastic on the 60-10, and the price holding the 20. Now, there's different variations of this, right? And that takes a little strength, a little knowledge, experience, all right? But then there's also textbook areas of that too. When you have a nice pullback, and what I like is a pullback to the moving average, the 20, and a move back down to the 9.3 to the 20 at the same time, and this is above 90. Now, that's our textbook, and I'll show you many examples of that. But here's a little different version of that. That's an upward 60-10 stochastic here. And that's giving us that 5-minute rotation. So we know our bigger channel is playing out. This we don't really get down, but we're also looking here. We're seeing this is showing some pretty good strength. So the underlying channel is strong, and there's a good shot that this actually turn back up because this doesn't have to rotate all the way down. If this actually turns up before it rotates all the way to 20, that's just a sign of even more strength in the market. So we watch it pull back. We realize that there's no give in this. As this is pulling back, this continues to go sideways to up. All right, and I can see that. And I'm watching the numbers on the side here, and my brain's calculating. All right, this is continuing to come down. This is hovering. It's ticking up a little. This continues to come down. It's holding the 20. This is going to probably right when this starts to turn up. This is going to bounce and it's going to take off. And that's how we figure that out. And here's another one over here, and we hold that 20. It takes off. And when I see this, I identify it. And then really, it's up to you if you're going to take that. But I always recommend taking it and taking the first pop out of it. You buy into the 20-period moving average. You buy into the 20-period moving average. Especially if it's make sure everything has to be set up. You have to have that rotation. You have to have the embedded stochastics. Not just to pull back to the 20, but it's very important to have that 60 very strong. So we're watching that all day. This and I traded today. This is my. Let's see if I can make this a little bit bigger. The things I'm showing you, I take on our prop account here. This is a Bullinox account that I use and I trade during the day, and I trade the setups that I call. I try to keep it right as it is here, but I'm going to make it a little bigger right here. See if I can make it bigger. And this is a 25K account, 25K account. And the object here is to profit about $100 to $300 a trading day, taking MES, because I get this question all the time. What do I trade? If this works so good, why don't you trade the ES instead of the MES? Or can I trade the NASDAQ with this and stuff? I specialize in the MES. I feel very comfortable with it. The setups are non-threatening. The stops are easy, and it's very easy to stay in business. You make a mistake on the ES, or something catches you by mistake, you'll be very fast. You'll blow up your account, and you have to think. So the object here, trading the MES, is not to put yourself in a position where you just you get caught on bad news or a wrong decision and stuff. First of all, the market is not guaranteed to move in the direction you think it's going to move at all times. There could be issues out there, but it's so much easier to trade that way and not have a lot of. And it's not hard to do this. I traded on this. You'll see the contracts. You'll see. And basically what I'm doing is we're pointing out each of the setups. If it's a sell side divergence or it's a buy side divergence. Here was a buy side divergence right here. There was a buy side divergence right here. There was a sell side divergence right here at the end of the day. It was a little one right there. We go over. And a lot of, this is on the 1 minute time frame. And that's it. I mean, 1, 2, 3, 4, maybe 7 trades. Maybe a little bit more than 7. But again, a lot of them just 2 contracts on the MES. Here's a nice sell divergence up here. And I'm always taking profits. Now, we had some good results in the chat room, people using the script the way I want to use it. Now, I'm doing this, I'm freestyling this. I'm not using the script. I use the scripts on the Rockbot channel to help identify the levels, but I don't use them when I trade the day, because I like to make the calls live and confirm each and every call and then send it out to Zella. So it's a whole different manual process for me. So let's see. So that's our goal. Our goal is to step up to the plate, not put yourself in too much risky. Don't put yourself in a risky position, ever. You'll eventually qualify over. And again, I always recommend getting a 25K, 50K account, $100 to $300 consistently. Never getting any close to drawdowns or anything. You're not gambling. You're waiting for 1 of 3 setups. That's the only thing you have to do. And I guarantee you can't do it. I guarantee it. I guarantee you're going to overtrade. Today was a day like this at Fridays. Very tough not to overtrade the end of the day. End of the day is here. You gotta be in it to win it, right? And that's probably true. But I'm only going to take a setup like this. This was a divergence setup here at 3:30. I mean, look at this. Why wouldn't you take that? Little divergence. Well, this was a great one. I mean, that was so good. And look how, this will make your day. But you have to wait for it, You got to wait for it. You got to read the strength. Here's a nice 50, we call it 2050 bull flag. It's right on the 50, and we're right on the 20. All right? And we're embedded up here. We're above 80 on this line up here. That's a 50-20 bull flag. It's right close to the 22. And again, beautiful setup there. That was at 3 o'clock. Let me see. I'm going back here. That's at 3:30. And again, 3:30, I'd like to call them out, but very rarely do I take trades after 3:15. But they do show up. It's not. And here's a nice channel too. And this is something that I consider a super signal. When we talk about super signals, a super signal is our best setup. All right, the best of the best setup. And there's only one super signal, really. It's basically a quad rotation with a divergence. That's our number one. That's our holy grail. And it takes a while to set up, but it's easy to spot. And what happens is, and I want to go over this again. I did this on a video a couple maybe last week. I call it the Holy Grail, and I kind of explain what happens in the process of this. And it's all about understanding the process of the setup playing out. And it happens when you have a quad rotation. Now, the quad rotation is a low, low, and a low, or a high, high, and a high above the 80 line. All of them have to be up there at the same time. And because of different speeds, some of them will be all over the place, and they all have to come into sync. They all have to be above that line at the same time. All right? And when you do, you can pretty much see that. You can see this was at the lows, this one didn't get the highs. It only happens, like here's another one, just about right here. See how that holds above that? So that's a very powerful, that's what we call multiple time frames. Each one of these stochastic oscillators is programmed or kind of set at a certain length or a look back period, the 9, the 14, the 40, and the 60. And each one of these kind of slow this down, and this really represents different time frames by looking at the 1 minute. I could tell you what the 5 minute is doing right now. So this is telling me that the 5 minute is overbought. The 1 minute is also overbought. We're also up against a trend line there. All right, so that's a quad rotation. Now we have a quad rotation here too. So whenever we have a quad rotation and we get a pullback, what we're watching for a super signal to happen, in this case it was just a quad rotation pullback, but what we're waiting for is a pullback and then maybe a couple candles and then a fast little pop back up to the highs, and it takes out the highs. Takes out the highs like that. In this case, we're going to show the example right here. This is here's your high right here. And then it came back a couple candles and then took out the higher high. But the stochastics made the high. It has to be at the high of the move. And this is from the move really from, we're talking 5 to 7 candle move on the rotation here. We're looking for a high with the stochastics, whatever price at the high of the prices at that time. Stochastics come down a bit, the price comes down again, and we kind of spike a little bit higher than the previous price, but the stochastics fail. So we have to have a divergence right after a quad rotation. So you have the quad rotation, then you have the little dip over, and what happens is it tries to get back up, and it fails, and it rolls over, and then we have a big rollover. So that's what makes the big move, because the 5 minute now starts to roll over. The divergence is going to break down. If the divergence happens in a channel, 9 times out of 10, the channel is going to break down. So everything was keyed up on that. So that was a super signal to the sell side, and I'll show you if we can see it, a super signal to the buy side. Now, we'll just kind of go back here. There was some situations where we were seeing really good strength in the market, and it's okay to take your trade off. I was looking here, I said, oh, this is a sell side divergence here. And this was at 110. Let me see if I take that. 110, yeah, let me see. Let me bring that up here. That was right around here. And I saw that, and I said, all right, we're kind of having a little issue here. And right when I saw that turnover, it was probably right around here, we were failing. And I jumped in it quickly, and it pulled back, and I saw that it was such a low, and we almost rotated all the way down. I was watching the 60-10. That was showing really good strength. It wasn't turning over, and we got oversold quickly here. And the price was messing around with that 20-period moving average. So I just took it off at that point. And I actually made a little on that. I made like a little 51.42. Took it off at 51.40. That's 1.25 points and about a point. Yeah, I mean, not bad. That's not bad on that little thing. But I was smart enough to get out. And we saw this divergence. This was a clean divergence right here. We took that. That was a clean divergence, and you can see it on the other chart here. You can see sometimes I have my Medved charts. I think you can see them better there sometimes. I mean, that setup right here is equal to this setup right here. And you can see the stochastics here. I put that angle in there. It's underneath the 20 line. You can really see it here. And you zoom in. Here's a little. You could always zoom in, and it'll adjust your chart, and you'll actually see divergences a little bit better. If it might not look as good on the chart, but when you suspect one, zoom out a little. I should say, zoom out, and then it'll see more of the angle that you want to see if you're gonna have a decent angle. Sometimes you zoom in, you can't see it as well. Just a little tip right there. So anytime we have that divergence and we rotate down and we feel like, all right, market's strong, this is very strong, we get out. We say, all right, that's okay. The rule is a divergence is defeated by a bull flag. A bull flag defeats a divergence. A bull flag defeats a divergence. And that's just a saying that kind of keeps in there. Nice little, and these are micro divergences. Not easy for everyone to spot. But when you do get them, instantaneously put your stop right at the highs. You get the rotation, you take profits. 1140. Do I take that one? Yeah, I mean, I nailed the setups today. I nailed them. I mean, that was being super, like I could see that, and I'm like, all right, I can see it on there. I see it on here. Right when I see it on there, I just hit it. I said, that you got to hit it. And I hit it pretty early. And got a nice pullback. And I took it off fast. It went down a little bit. It went down a little bit further. But in this game, I've learned that we're not here to hit the home runs. Singles are gonna make us the money down the road. Just continual consistency. What happens now is we start to trade like this. We're not getting into anything bad because we already defined our strategy. We're not gambling. We're trying not to gamble. We're just being or over trading. And over trading for me is trading anything that does not fit into the criteria of our top 3 trades. Now there's other trades that we trade, the coil stochastic, coil stochastic, the bull and bear flag, the 2020 flag, and the divergence. That's the top 3, I would say. And the quad rotation. And and the super signal is kind of a regular divergence too. So I mean the divergence, the quad rotation, the flag, and the coil. Maybe four setups, and it's not hard to wait for those, believe me. And it's fun. We're all together in the room. Even though, look at this, 7:10 in the morning. Beautiful double top, little divergence there. 122 to 120, 118. I'm not saying you're going to get all that. You're going to get a little of it. Once you start developing, and if you're trading a prop account, you can trade the ES. I mean, what the hell? I'm not saying you don't trade the ES, but if you're serious about it, you want to, open up a bunch of 25K and 50K accounts, take it nice and slow, qualify them, then let them then they're going to generate income for you. You're not going to you're going to be organized about it. 1 or 2 accounts, and then the way the prop accounts kind of are rigged up on, the way you take out money and your trailing and your drawdown and everything, it's all stacked against you. So you have to play the game. And they expect you to be radical and crazy because, they know the odds are with the trailing stop and how the markets are. You have to get qualified, and then you have to have very, steep qualifications. But if you take your time, they're not expecting that. They're not expecting something, very organized. You're going to do that. And that's a good thing for them also. Quad rotation. So, again, that's what we did all week. Now, when we have news out, and it was some pretty crazy news, let's see here. This was, we're just going back to the other day. Let's see here. This is Thursday. Big reversal on Thursday. Big sell-off. Sold off hard here, really hard. And you didn't really, when you have that major sell-off, it's very hard to kind of time where you want to bounce. I'd let the first half an hour to an hour just kind of get out of the way, start to see a pattern form, and then kind of just start to see some rotation here. Because once you start to get embedded down here, like this is very difficult when your stochastics are embedded. You just have to know that the embedded stochastic is a sign of strength in the direction of the stochastic. So you see how weak this was here at 840. This was embedded. Every rotation was a perfect bear flag. So that would be the only trade that's a logical trade in this type of environment. This kind of rotation up, the rotation up here. This is stays under here. Bear flag right there. Right there. Here's a 2050 bear flag right here. Then we had a little bounce there, and then we came back and we had a quad. So this was our kind of a quad. We did have a little quad right here at 940, and it didn't give you a lot. And it pushed right up against the 50 and rolled right over. And I think we did take that trade. It got out real fast. Had a divergence here. This is another thing that is probably key. It'll help you a lot. It's called a running divergence. It's where you have a high and a lower high. You have a high and a higher high, and it's kind of like, all right, I get that higher high and a lower high. I want to take that short and put my stop right above there. And look at that. The little candle came up and just took that out. Now, we have extremely tight stops. Feel free to expand your stops a little. But with the divergence setup, you typically can do this and keep a very tight stop. And I would actually recommend you keeping a tighter stop than too wide, because if it does break out like this and then come back down and continue to be lower than the previous highs. Now this is important. This is called a quad. This is called a running divergence. You get a high with the stochastics here. Then you get a higher high, and it could be any in this area right here, and you see that lower high setting in. And you're like, all right, that's great. I want to jump in on this right here. And what happens is it kind of grinds up and it takes out for a tick, and you think maybe you're wrong. But what happens is this doesn't turn up. It doesn't get above the first high. It's okay to get a little above this second one, but it's important it doesn't get above the first high of the divergence. So if it turns back over and sets up as what we call a running divergence, you have to get right back in. So this is okay. Take a 2-tick, 1 point, 2 point loss. If it shows up again, it doesn't happen too often. It's a running divergence. We know that. So you gotta take that again, and you put your stop right at the highs again, and you take that. It's okay to be, the market, the algorithm sometimes, especially around VWAPs, kind of be reaching out. Perfect flags. So overall, I think the discipline was good this week. I think the setups were good. I think the setups will be very good next week. Next week we have the Fed meeting on Wednesday, so the market ahead of that, and we'll see we'll see if anything's on the almanac for next week. But the market ahead of that should be kind of calm until we get up there, and I'm not expecting a lot from that report in the way of any surprises, except it's probably nothing going to be great. There's not going to be good news. That's for sure. It's not like they're going to see anything different because all the data points came in as hotter than expected. So if anything, he's going to pull back on, what people wanted to hear. He's going to, kind of squash those thoughts. But that's probably already baked in. So, Fed weeks are tougher. They're tough. But it's probably a good idea to get that 90% of coupon. These are the times you want to take a gamble. So again, let me go over that fast, and then I'm going to give you a site update next. Got some big news coming up here for you. So here's there's the Apex is 80% off. The Bullinox has a 90% off coupon. DTR 90. It's good until April 31st. It's probably a good idea to take that going into, again, you could get it now, and then it's good for the month. So I don't know when Wednesday is going to be. Next Wednesday is going to be, that's going to be the 1st, I believe. So you want to get before the 1st. That way you have an opportunity to maybe do a gamble on the Fed, the Fed release. the FOMC rate decision and announcement and Powell doing the thing, you could probably get a 90%, 1450, a 1450 account, 25K account, and get two of those. Put one long, put one short, and let it ride. And you'll with a good shot, you might qualify on one of them. Well, the market is again very easy to take out both sides, but there's always a better chance when you have news like that, and that's something that it's an educated or a tempered, or what should I say? You know your risk involved, and you're gambling, but you're doing that. All right, next part of the video here is updates on the site and some of the projects. I have not pulled the trigger on the copy trading this week. I apologize. The earnings came out. They were very aggressive on the downside. I didn't want to get in front of that market, so I kind of stayed back from that. I got everything set back up. Everyone's in there. There's no problem with it. I'm still very active looking for it. I didn't see the setups I wanted today. I did miss a couple this week, which kind of made me want to really buckle down on it. So don't give up on that. That'll be active next week. The script, the Rockbot script's been a lot of requests for the Rockbot script to be coded for TradingView, and I have that underway. That is being done right now, and it should be available hopefully in a couple weeks. TradingView, the Super Signal script. And the Super Signal is running on the Rockbot, and the Rockbot has, and this is how I recommend people setting up some of their stuff. We have four charts on here, and each chart is a different time frame. So we have the 5 minute, we have the 3 minute, which is the lower left, we have the 1 minute, and we have the 300 tick. And the object here, well, not the object, but the reason we're doing this is because when we have multiple time frame divergences, it's very, very powerful. I could see that on the stochastics. We could do that by changing it, but it's so much easier to just look at this. And if we see 3 or 4, if we see, to make everything lining up, it's usually an excellent setup. So I want people to have that available. So I'm going to try to keep it on a quad screen. Looking for some feedback on that. If you like it, let me know. If you like the one screen, let me know. I mean, I'm going to try this for a week. And see how it works, and see if we could get any good signals from it. Another thing with a lot of people want that script. You got to know how to use it. You have to manually let it get you in trades. Don't let it run overnight. It's not meant to be an Autobot. It's meant to trigger and get you into great positions where you manage it based on market conditions. I want to do a special video to update that coming up. Also this weekend, so that'll be a separate video altogether. So the copy trader, the Rockbot channel active. I am putting together a list of playbook videos I had for the forum. RPM contacted me today, said the guy is back on it, so maybe he's going to have something for us on the forums. Hopefully this week I got to email him back and get more of a definite answer. But either way, I want to give you guys those playbook plays in video format. Next up, we're going to be talking about the trades for this week, new positions, and what we sold and what we bought this week. And then after that, we're going to do the watch list. All right, change of plans. Instead of adding the stock watch list on this, I think I will add the stock watch list on a separate video. So I'll close this one up and kind of keep it a little separate. Just making that. If you guys feel like it should be on the same video, let me know. Anyway, we'll close off here on the video. Just talk about one last thing I want to mention. Take that bird's eye view here. Let's take a fast look. We're flying over the market in a jet, and we're looking at mountain ranges or topographical maps, and you should be able to recognize trends. And when you have these bounces, and when you have these 9-3 bounces, and these are embedded down here, really stick. It doesn't have to get to 80, but you know that once it gets up to 20, it's typically going to hold back. So as you see this, now eventually this might change. You might see more of the 50 hold up. The 50 and 20 both should be taken on this type of setup. So when we zoom out, we see the divergences. We see what works. I got done with another coaching session today, and I think it all comes down to over trading. Only trading the setups we identify. Get those setups. Be serious about your trading. Be so serious. Be a rock star at your trading. Be the best you can be. All right. Wait for the setups. The patience is the hardest thing. With the prop accounts, they're great for us, but they're also kind of like don't give you a sense of really, enabling you to. It's up to you. It's up to you to make that decision if you're going to do that, or you're going to be nonchalant about it and just take random trades and try to qualify. Believe me, that's what they expect you to do. All right, that's what they expect you to do. I know the way. It's slow and it's steady, and most people want to get there fast, and they see the temptations. But all you have to do is wait, one step at a time. $100, $300, MES, multiple contracts. Wait for the top 3 setups, confirm them, get the Zello alerts, take the trades, take the first pops, take the profits. Maybe leave a little on to run. Watch the 5-minute. Very simple. All right. So I want to send this out. Hopefully you enjoyed something on that video. And have a good weekend. You'll be getting the stock watch list video probably tomorrow. Tomorrow. Good night. Oh, I just noticed something. Oh man. I had the wrong channel. All right, so you know what I'm gonna do? All right, change of plans. We're gonna actually finish up this video and kind of keep it separate from the stock video. Stock video will come out tomorrow, and it will discuss our new entries, HPS watch list, any new setups. All right. But let's finish off with the with this note on the futures and trading your prop accounts. A lot of people will, it's going to come down to you really controlling your own greed, and that's something I can't do. I could stress it so much that it gets sunken in, and I'm right. You know it, but it's still hard, and I understand that too because I'm part of the program too. I need to be called off the ledge sometimes. It's not easy. But that's what that's what these prop firms want. They don't want it to make it easy. But if you zoom out here and you just see what we look at each day, and we have maybe 3 setups to look at, and you have, and when you see them, especially the divergences, you take them, and we have contingency plans if something goes wrong, meaning if it's a bull flag or a bearish divergence into a bull flag, we know how to identify that. We know when to get out of a trade that might not work. We know how to see strength. We know everything about the market. All we don't know how to do is control it and wait for the setup to take, the proper setup to take. So again, all these setups, the opportunities, the bird's eye view of a downtrend and each bounce up to the 20, we have to be able to recognize that when it happens and only trade the direction of the trend. Makes things so much easier. Instead of trying to outguess the market. We know how this works. We know the combination and how this all works. 50 period moving average. If the 20 doesn't hold and the 50 holds, but we have the same setup, that's a legitimate 20-50 flag. Bear flag right there. Quad rotations give us the move. Divergences give us the move. Everything is defined. All right, I passed that on to you tonight. Hope you enjoyed the video. If you have any questions or comments, I remember I want to do a video on the how to use the Rockbot script again, because I think a lot of people the set it's really great for an order entry. It instantaneously gets you in without thinking. So it's identifying these levels, quad rotation divergences, gets you in. You typically get a nice little bounce on that. Sometimes a screaming runner. I want to switch over. I have the Rockbot channel set up to 4 quad screens now. So that was super signal right there. See, we have 4 different. We actually have 4 different charts here. We didn't have many setups today. It was kind of a 9:30. We had a 5. I think that's a 3-minute setup. 9:30, right at the bottom. That was the low of the day. It had a nice little 3-minute divergence. A 5-minute time frame is at 9:32. So this is the type of setup you want to take on this. It's when both of them give you the same signal. It is absolutely the best setup ever. All right. The 3-minute takes a little bit different, but when the time frames, I have 3 time frames. I have the 1 minute, the 3 minute, and the 5 minute. 2 of the 3 line up. You take the trade. You know, they'll line up. It's on your RockBot channel. Or you can watch the Rock. I'm going to have this on this. You don't have to put it even on your computer. You don't have the script. That's okay. Just watch the channel. When they both line up, you take the trade. You know, and they will. You'll see it. You'll hear it. You'll see it. You have it in front of you. You have it on the dashboard. And maybe you get one of those, 2 of those, 3 of those a day. Maybe one every 3 days. The fact is, you got to take it. That's usually the biggest trades. So that's a good example right there. And we can zoom out and let's see if there's any other setups. This would be really key. Let's just go back all the way to we're on this chart here, 3-minute time frame. And the latest, this was at, again, look at this setup. The beautiful divergence there. It looks like a little after 10 o'clock. I don't know when this was though. What day it was. I wonder if I could see. If I could put a data box up. All right, so it is on the 425. 425 at 10:10. 425 at 10:10. So let's go out here on the 5-minute and see if that was the same setup. If it was, you know how good that is. Oh man, look at that. Jesus. That's exactly right where it was. It was a 3-minute, 5-minute setup. This is exactly what you got to take. And that's why we're going to have this set up like this. It's going to be unstoppable. Unstoppable. I'm sure if we go back in the 1 minute, we've had a 1 minute setup too. 1 minute's going to come in a lot more. Sorry for my scratchy throat. I've been here since 8 o'clock this morning, and it is almost 11 o'clock at night, and I am still talking. I want to get off of this. All right, have a good weekend. DayTradingRadio.com. Everyone will get this. You want to get the Zello alerts where I identify these setups? This is now going to be a Zello alert. I call it tonight, whatever day this is, at 10:14 p.m. A new addition to the Zello alerts is called, and we have to name this. It's like 2 out of 3 time frames. You know what it is? It's called a dual time frames divergence. But I want to make, just understand this is an important setup. 3 time frames, the 1, 3, and 5. If 2 of them give you the same signal, you take the trade. It's usually the best, and that's very, very important. All right, gold right there. Gold. I just gave you gold. Everyone should be like calling their jobs on Monday, quitting their jobs. It's the gold rush. All right. Have a good night and have a good weekend, everyone.